All right, it says we're live.
Okay, well,
All right. Well,
we'll take its word for it.
I guess let's see if it works. Okay, I just want to say thank you, Trey. I appreciate you for coming on today, taking some time out. I know you weren't feeling good, but I just want to kind of go over some stuff that a lot of people are asking me. So is that okay? We just have a conversation, ask some questions.
Absolutely, let's do it.
All right. So, what do you think? How has coronavirus affected credit scores for buyers right now?
Okay, so when it first hit, the market kind of didn't know how to react, and we saw the massive unemployment. We saw all the talk about forbearance, and it really scared the market. And the first thing they did was pull back on credit scores. So companies that were doing low 600s were doing minimum 640s now. And I've heard of some of the banks that actually pulled up all the way to 680.
Wow.
Now we pulled back ourselves. We were at, I've always been able to do a 580 credit score on FHA, VA, USDA, and possibly even lower with down payment, with an increased down payment on FHA. But we were always able to go that route. Now, just because, and I guess I should clarify this, just because you meet the minimum credit score doesn't mean you're getting approved for the loan. We run everything through an automated underwriting system. And then in addition to that, there's also the ability to possibly manually underwrite the loan. So don't want to get too technical on you, but the good thing is at a 580, if you were somewhere above that, we didn't just automatically say no. You had a chance. And so we pulled back too, up to 620. But just recently, about a week and a half, 2 weeks ago, we did get some money available to us through a lender where we can go back down to 600. So it seems like it's getting.
That was my next question. Like, what score do you need? So you're saying we'll pull back to around 600.
So I can do it with a 600 now on government lending. Yeah. So FHA, VA, USDA.
Okay.
Not all the outlets available to me. Not all lenders have lowered their scores yet. But it definitely, it's a sign that we're getting some normalcy back in the market.
So I'm glad you brought that up, because a lot of people don't know, like, what are the different types of loans and how much of a down payment they need to come up with. Can you kind of do like a brief overview of like what the different?
Yeah, sure, absolutely. So I mean, your conforming loan, conventional loan, you're going to need probably like a 680 in that range credit score. There are some 3% down programs. Generally, you're looking at least 5% down on a conventional loan. And then when you get to the government loans, people like the government loans. A lot of people think they're first-time home buyer loans, and they definitely are used by a lot of first-time home buyers, but they're not exclusively for first-time home buyers. They do have a little bit of a leniency on some of the credit issues, more so than a conforming conventional loan. So the lowest one would be USDA.
Right.
USDA is a zero down program.
So where do you have to buy your USDA loan? Where do you have to buy a house at in order to?
So USDA is the rural housing program. So you have to buy in an area that's considered to be rural housing. Now it's a little strange around here. I live in Claremont County, and in Claremont County, you almost have to check each individual address to see. I've seen where one side of the street is considered rural and the other side isn't. So you almost have to check. You go over another county to Brown County, the entire county is considered rural. So there are some pockets here and there, probably none that I know of in Hamilton County, but definitely you get up towards Warren and Butler County, there's some areas that would fall under it. So that's a zero down program. The big caveat with the USDA is it's also income based. Okay. So, a family of four can make up to, and don't hold me to this exact figure, but it's like right around 90,000. So it's not super tight. but they're definitely income limits. So get a couple of working, a family with a couple of working members in it, and you can surpass that number pretty easily. Next one, as far as down payment wise, would be FHA. FHA is a 3.5% down payment program. And that needs to come from the borrower, or in some cases, it can come from a gift, either from a family member or possibly a government agency. So there are some down payment assistance programs out there, like the Ohio Bond Program or Communities First. Now, those programs do have higher credit score minimums.
Question. I'm gonna go circle back.
Okay, then circle back to that. Then, so VA is your third government loan. That's a zero down program. You do have to be a veteran, an eligible veteran, to participate in that program. And that's zero down, no mortgage insurance, and of course, that's probably my favorite loan. But
since last year, thanks to you.
We do them all, though. We do them all here.
Okay, so what about I know for VA, I had a couple of VA buyers last year. They had to pay a VA funding fee.
Yeah, so the VA doesn't charge mortgage insurance, right. But the way they kind of self-fund the program is that they do charge the veteran an upfront one-time funding fee. Now, they don't make them pay that in cash. They let them, that's actually able to be rolled into the loan. Okay. Now, here's the good thing. If you have a 10% or higher VA disability rating, the entire funding fee is waived. And it's waived whether it's your first use of the loan or it's your subsequent use of the loan. So, and that can be pretty substantial savings-wise.
Absolutely. Okay, so let's get into what do I need to get down payment assistance? What score? Like, I know that's changed. So
yeah, so that's gone up as well with the whole pandemic. And you may see that lighten up in the future. Right now, I need a 660 on FHA VA. And actually, if you give me 1 second, let me pull that up because I'll give you exactly. So actually, on FHA, I need a 660 credit score. On VA and USDA, I need a 640 credit score. Okay. Now, USDA and VA are both zero down programs, so you may be saying, why do I need down payment assistance on that? But the down payment assistance can be used to cover your closing costs.
Okay, awesome. Okay. All right, and are you guys doing like Ohio Financing Agency down payment, or do you have like your own in-house down payment assistance program?
We don't have in-house, so the two agencies that we use would be Ohio Housing Finance Agency, OFA. Okay. And then we also use Communities First, which is a part of the Port Authority.
Okay, so one of the things I like to bring up is what's important about picking the right team to help you buy a house. You know, like I know what my thing is, but you know, people are different. So what's your opinion? Like, what do you think about picking the right team?
Well, I mean, I think it matters who you work with right now. I think now more than ever. We're in a really tight market. There's not a lot of stock out there for home buyers. So right.
Inventory is very
inventory's low. I'm seeing, I'm doing pre-approvals and people are getting in multiple offer situations. So, yeah, I think it's important who you work with, definitely.
From my standpoint, you know, because it's multiple offers, just communication from the lender. And you've always been very great. For me, I call you anytime and you get right back to me, or you tell me you can't get back. But there's been lenders out here that I would say, hey, can you shoot me over to pre-approval, and crickets.
Yeah, well, I mean, everybody's busy right now. I'm not going to make an excuse, and I'm not, you know, for other lenders. I'm sure there are times where I'm not as fast as I should be or could be. But the communication is absolutely the key. And like you said, even if it's a quick note to, hey, I can't get with you right now. I'm, you know, in the middle of something, but we're all real busy. But yeah, you got to communicate. That's key. So I think and you got to be able to trust each other. I got to be able to trust what all the parties are telling me is accurate. And so, yeah, it's great to work with the same people over and over again. You build that team, definitely.
We got some comments. Hey, Lou, I hope you're getting some value. Hey, Pam, I hope you got some value. Thanks, Miles. Okay, so we want to talk about another thing that I want to talk about are upfront costs. Okay, and I'm gonna let that kind of go along the bottom right there. But some of the upfront costs that people really don't consider is the earnest money. So like a lot of my friends that are like out of state, that's real estate agents, they're like 1% of the purchase price. But here I've seen people put down $250, $500, $1,000. It really just depends on the amount of the house, in my opinion. So I just want to get buyers aware of some of the upfront costs that they're going to run into, which is like your earnest money, your home inspection, the appraisal. Do you guys charge an application fee?
We do not.
Okay, because I know I had some big banks that was charging some of my clients' application fees, and that was like a cost they weren't prepared to pay.
Can you still hear me?
Yes, I can hear you.
Okay, you went quiet, but
can you hear me?
So we don't charge an application fee. The one thing we do charge, so a lot of my first-time home buyers are asking the seller to pay their closing costs, at least up to a certain amount. One of the things that I will collect at the time of disclosure is for the appraisal. The appraisal is a third-party fee, and we have to pay that, once the appraisal has been done. So what we do is we collect, we get a credit card in an authorization form signed by the borrower. We don't run it unless that loan doesn't close for some reason. If the appraisal happens and the buyer backs out, I still have to pay that appraiser. So at that point, we would charge the borrower. Normally, though, we cover it during the application process.
Okay, that's great because a lot of people have to pay up front too. So that's another thing to consider. A moving cost, that varies. I'm not sure how much that costs. So and closing costs, that's something that they're going to have to pay. Hopefully I try my best to get most of the closing costs taken care of by the seller. But, sometimes you have to come to the table with money. Do you have that conversation with your buyers?
We do. I try to have it with the agent ahead of time as well. So when I talk about closing costs, I'm talking about not only the costs associated with getting the loan, but I like to think of it more in terms of the cash to close aspect. That first year of homeowners insurance that the borrower has to pay up front, setting up that escrow account. So there's a little more that goes into it than just the costs. But of course, there's the appraisal, the title work, and that does vary based on the sales price.
Okay.
Also, on the taxes, the property taxes would have some bearing on that as well. But yeah, I try to run all those numbers up front and get as close as humanly possible. There's a few unknown pieces. I don't know how much your homeowner's insurance is going to be, so I have to guess at that. But been doing this a few years, so we can get pretty close on our guesses.
Yeah.
Try to get it as absolutely close as I can.
I'll tell you what happened when I bought a house, and I was looking, and I found a house I really loved, and I called my insurance company, and they told me I was in a floodplain district, and I'm like, what? And when they gave me the quote, I walked away from the house because I didn't want to pay the extra.
Yeah, so that's one of the title things we'll do is a search to see if the property is in a floodplain, and if it is, we're going to require that you carry flood insurance on it, and it's not cheap.
It's not cheap.
Yeah, so I've had a couple this year actually that went through, and so we can do them. Being in a floodplain doesn't rule you out from getting a loan.
It doesn't rule you out. Just you have to be sure. Like, is this what I want to pay?
Is this what? Yeah. I mean, I'm with you. I probably would have walked away. I have water problems where I'm at now just because our land's real flat, but that's drainage problems. It's not floodplain problems.
Okay, so I want to circle back to something else because it's a little confusing for people to understand when they're talking to different lenders. I want to talk about rate locks. What's a rate lock and how does that work?
So I can lock your rate once you're under contract and I have a physical property. So my company, the rate lock goes with the property. So for an example, if you get under contract and you need to close in 30 days, or maybe the contract was written for just slightly over a month, then I'm going to lock your rate probably for 45 days. And basically I'm guaranteeing you that interest rate is going to be there for you, no matter what happens in the market, whether it goes up or down during that time period. And we're making a commitment to the lender to provide that loan to them at that rate, at that sales price. Rates are usually locked like 30 days, 45 days, 60 days. That's usually the time frame.
Right.
And we're busy right now. I've had over the last week a couple of appraisal requests get turned down by appraisers that says they're too busy to get to them.
Wow.
So I could see that maybe adding a little bit of time to the process, but normally 30 days is what we do across the board, pretty much all product types. I would probably write maybe an extra week on a USDA right now. USDA being the only loan that has to get approved from outside of my company. So once my underwriter approves it, we still have to send the final package to USDA for their final approval. So that can add a day or two, just depending on how backed up they are. But between that and the appraisals, probably a 45-day contract is probably pretty normal in this market. But I'm still doing 30s.
So let me ask you this. I know you said you can lock you in a rate. I know a lot of people get into rate locks because they are kind of scared about the rate going up. So what happens if they rate lock and it goes down?
Yeah, that's the risk you take. Everybody wants that upside protection. It's hard to have it both ways. So
that's true.
I mean, if it moves dramatically enough, then there might be an opportunity to renegotiate the rate lock. But I mean, if it's moved an eighth or so, you kind of have what you have. So, I mean, you're going to have the option to float it or to lock it at the time of the application. And the market's been pretty volatile, especially with the whole Corona thing.
Right.
I mean, in the grand scheme of things, I think it's settled down quite a bit. But if we were having this conversation a month ago, I'd be locking no matter what. But I'm kind of conservative to begin with. If you look at the rate, if it's a good deal, if it makes sense, I personally wouldn't. I wouldn't float something with the expectations of that. I may pick up an eighth. To me, that's not worth it. I'd rather have the peace of mind.
Okay, so let me ask you this: should buyers shop around for lenders?
Yeah.
Because like, what's the maximum amount that they should talk to? Let's say, for instance, I call and I get a pre-approval from you, and I don't like what you have to say to me. How long do I have? Like, is there a window? And how many people should I talk to without it really like really damaging my credit?
Yeah. Okay. So that's the key there. They say you have like a 30-day window, or maybe it's a 2-week window. It's probably a 2-week window where you can have a few lenders pull your credit without affecting your score, without it showing as multiple inquiries. And that's for a mortgage pull. I wouldn't necessarily need 2 or 3 people pulling my credit. I think it's important. It depends on where they're finding their mortgage lender, I guess. If they're being recommended by their agent, I'm assuming they're being recommended for a reason.
Right.
They do a good job. They communicate well. They're not unethical, ripping people off. So, I mean, I'll tell you, most of mine probably don't shop after we talk. But yeah, I mean, you should compare costs, definitely. I don't necessarily know that that means you need to be having your credit pulled every time you talk about costs. Now, it is impossible for you to call me up and say, hey, what's your rate today, without me knowing your full situation. But I can tell you what my closing costs are.
Okay, that's even better, because I think a lot of people get afraid of that, the closing costs.
They do. So the other thing is, I mean, in order to really know what we're dealing with, can I get you approved? What kind of rate can I get you? What program can I get you on? I have to pull your credit. There's just no way around it. So much of that that whole process is being driven by your credit. Not only the score, but the credit picture overall. So don't be concerned that my credit pull, you know, at worst, you're not going to maybe a point or two off your score. So that my pull isn't what's lowering somebody's score. I guess is the bottom line. If you're wanting to buy a house, it's got to be done.
Okay. Is your office open, or are you guys closed, like for like because of Corona? I see that you're in there, but can people come in here?
I'm in the office right now. I mean, I'll be honest with you. I have the front door locked because I'm in here by myself, but the lights are on, and I can see the front door. So,
a lot of people are closed. Like I'm still doing. I just put on the bottom that I'm doing buyers consultations. I'm doing them virtually. I have a couple inside the office, but for the most part, I'm doing everything as I can virtually. So,
and a lot of our people are too. A lot of my coworkers are working from home. I'm not a good work from home type of guy. I got to get up and get in my space. I mean, I know my weaknesses, and I need to be in the office to get work done.
Okay. Is there anything else that you want to add? I'm putting your information down there on the bottom for people to call and get pre-approvals or to ask questions. So I hope it's okay. I put your number.
Absolutely. Yeah, absolutely. No, I don't really have anything to add. Just, you know, I would tell you this, that if you're interested in becoming a home buyer, start the process. I think everybody can be a home buyer.
How soon should they start the process?
Well, okay. So I think everybody's situation is different. But without seeing your situation, it's so hard to answer that. So I was going to say that I think everybody can be a home buyer. The question is, when can they be a home buyer?
Right.
So some people, it may be right today, and other people, maybe we have to build a plan. You know, a lot of those plans I can build myself. Some of them may need more credit counseling than I can provide, and I've got a guy for that too. So everybody's situation is unique. So I don't think it's ever too early to start the process if it's something that you know that you eventually want to get to.
Okay, so I got a couple questions on the screen. People are asking, so we can address it. Joshua says, so if I have one place pull my credit for a mortgage, it won't hit my score. So I'm not sure if he's saying if he has more than one person, it's going to hit your score if you get that first person, right? But I'm not sure if he's asking for subsequent.
It's really hard to get a definitive answer out of the credit bureaus. If it dings your score at all, it's a matter of a point or two. It's negligible. If you're having, let's say you're shopping with 2 or 3 lenders and you're doing all that within like a 2-week time period, by the time you hit that third guy, it should not be affecting your score at all.
Okay.
He should be pulling the exact same score that the first 2 guys pulled.
Awesome. Okay. I got another one. Tammy says, can a person get a loan in Ohio and use that loan for a different state?
So if I'm understanding what you're asking, like myself, I'm in Ohio physically now, but I'm licensed in Ohio, Kentucky, Indiana, and Pennsylvania.
Okay.
So yes, you could use a loan officer that's not in your state as long as they're licensed in those other states. I'm not sure if that's the question you were asking or not.
I'm not sure. Yeah, I'm not sure. We got to get that question clarified. So that's why I have Trey's information scrolling at the bottom. If you have specific questions about approvals, please reach out to Trey, and he can. I am not a loan officer. I know enough to be dangerous. So if you have specific questions, I suggest that you reach out to Trey. If he didn't answer what your question was, we got one more. Daryl Carpenter says, what does your score have to be to get down payment assistance? We did kind of touch on this, but can you circle back for people?
Yeah, absolutely. So if you're going FHA, today I need a 660 credit score. And if you were using VA or USDA, I would need a 640. Now there's also conventional, and that's at a 640 as well.
Oh, 640. 640 is actually lower.
Yeah. Now keep in mind, just having the credit score doesn't mean it's going to work. So we're going to run that through an automated underwriting system, and I do need to get that approval through that system in order to use those down payment assistance programs. So I can't use down payment assistance on a manual underwrite.
Okay, so is this conventional loan you're talking about? Is this the traditional 20% down conventional loan, or is it one of those 3 or 5?
No, it's not. It's like the Freddie Mac Advantage program. So it's a first time home buyer program.
It's first time. Okay. So how long do they have to pay that PMI?
You put me on the spot. I believe PMI drops automatically on conventional loans at 78%.
Okay.
Now that's based on the amortization schedule and getting to that 78%. So, what is that on a 30-year loan, maybe 12 years, something like that. It's a while, 8 years, 7. I don't know.
FHA loan. And so there's like, oh, that PMI is not coming off, but I tried to call my bank to get it off and they will not release me.
Yeah. So FHA, the mortgage insurance on an FHA loan as of today is on for the life of the loan.
Okay. I can't stand it.
FHA has, so I've been at this, I don't know. What's today? June 5th?
June 5th.
I think I started June 1st of 97. So like 23 years. I've seen it where FHA was dropping the MI, and then they've gone back to the life of the MI. They've flip-flopped back a few times. Right now, it's for the life of the loan.
So just for people who don't know what we're talking about, if you get an FHA loan, you have to pay MIP, right? MIP,
yeah.
PMI, for the life of the loan. That's mortgage insurance. Can you explain a little bit? I don't want to get the wrong information out there. Can you explain a little bit what that is so people know?
Well, basically, mortgage insurance is it allows you to buy a house with a lower down payment. Traditionally, historically in the past, you needed a 20% down payment to get a mortgage.
Right.
Then they came out with the mortgage insurance, which basically gave some insurance to the lender in the case of default. Traditionally, the risk of default's higher, the lower down payment you put down. So they're insuring the lender and allowing the lender to accept less down payment. So letting you get into a home faster. Traditionally, down payment has been the barrier to home ownership. Right,
absolutely. Well, I think we're gonna go ahead and start wrapping up. I just want to say thank you, Trey. I've worked with Trey, guys. He's a fantastic lender. I consider him one of my friends. Matter of fact, look at this. Wait, can you see it? Is it?
I can.
You gave me this cool mug that I love to use around my house. I also have the travel mug too, which is dope. So, but Trey is amazing. He's great with communication, and he always loved to help people. And I just commend you for that. And I thank you for taking time out from your schedule to basically, give back and let people know what everything is about right now. So I appreciate it.
Anytime. My pleasure.
Absolutely. Well, you have a great day. And again, let me go ahead and put this down here. If you have questions, if you want to get pre-approved for a loan, or if you have questions about the process, please reach out to Trey. There is his information. He's at USA Mortgage. He does all loans, even though he is the VA loan guy. And
I'm also your home loan dude.
You're a home loan dude.
Yep.
Yes. So I appreciate Trey for coming out. If you guys want to set up an official buyer's consultation with me, we can kind of go over the process, the steps to home ownership. Give me a call. That's my personal cell phone number. Or look us up on Facebook. I think,
yep.
did you write his last name is spelled Budke. So I think that's in the description on Facebook, but call him. Anything else, Trey?
That's all I got. Have a good weekend.
Have a good weekend. Thank you.
All right.
Bye-bye.
Take care.